Hi, my name is Adam Pearl. I'm a currency strategist at Dodjit.com. I would first of all just like to welcome everyone to our daily video market briefing. These videos are going to be posted on our website every other day under the article section. Now, the videos themselves are going to focus on the Forex and stock market, but we're going to try to give you the bigger picture of what's going on, what's affecting what, and also different scenarios and different perspectives, things that we are looking at. Now, before I just start, I just want to mention to all you viewers that if you've got any questions or the stuff that you do want to ask us, feel free to post your message on our forum. We try to answer as many questions as we can there. And if there's different things or different charts that you want to bring up and ask different questions about technical analysis, feel free to do that. Alright, so let's go over to the first chart. The first chart is the dollar index chart. It's a daily chart. And basically, because of the situation, there's no faith in the economic financial sector in the US. Obviously, it's affecting the global economy. People are just rushing to the dollar. We saw on Wednesday that the market, the index itself, it gapped up. It gapped above this resistance level and went back into the previous consolidation area. Now, I'm not expecting any rapid movement. We could drift a little bit higher to the 87, 88 level. But, obviously it's going to depend on what's happening in the US. I know that officials, the new president, they're all trying to get the financial sector up and running, stable, to stabilize the whole situation over there. I don't think, we're going to see any improvement anytime soon, but we could receive a little turnaround in, traders' expectations. If they expect that the situation in the US is going to improve in the near future, so that when we could receive a slight turnaround in the dollar. Obviously, this is going to depend on a few different things, and one of the charts that we're going to have to continue to observe is the S&P 500. Let's just bring that up. Now, since the beginning of 2009, the markets, the indices, the stock market just hasn't managed to find any support. It's just been continuing lower throughout all the sessions, and on bullish days, on days that were, we received white candles, we can see that the white candles are fairly small compared to these red, big, massive bearish candles. Now, we broke support just around this area around here. Let's just bring that up slightly, just around here. We're trading around the area right now. Obviously, if we're going to break it completely lower, when I'm talking about break, I'm talking about a full candlestick that breaks lower and the close is much lower than this support level. So then obviously what we're going to do is we're going to go down to test our prior lows. And this will be a critical point. Because if we do break those prior lows, obviously money's going to start rushing back into the dollar and, to safe assets. So, that's something that we got to watch out for. Also, indicators are pointing to further negativity. But, obviously, until we don't break this, until the markets, the S&P or the NASDAQ Dow, until they don't break this level around here, then, obviously, there is some hope for some positive sentiment in the markets. Now, another chart that I want to show you guys is a crude oil chart. Now, this is a very, very interesting chart because it's presenting at the moment a price pattern that, let me just show you. At the moment, you can see that we've actually hit a type of resistance level. Now, if you look carefully, we've got this type of inverted head and shoulders pattern. You can see we've got one shoulder right around here. We've got the head just around here, and we've received like this long right shoulder just around here, which is actually in line with support. So this is a trade that we're actually looking at. Crude oil has decreased rapidly over the last year, and it's reached a price that I'm not saying it's attractive for buying. what I'm saying is, you know, keep an eye out on this trade. Obviously, if we're going to break higher, this is something that we're going to be looking to take long. We've also got resistance of the SMA 50, which will probably act as a resistance. So, you know, just watch for the breakout on this. Now, the last chart that I've brought up is a gold chart, and this is actually a weekly chart. We can see it right here. It's a weekly. And the reason I brought up this chart is because of the chart pattern that it's actually formed. It's formed like this type of massive megaphone type of pattern. If we look here, we've got the upper resistance level roughly around there. We've got lower support right around here, and we've got like this type of handle thing that's going on around here. Now we're at the top of resistance, so this is something that also we're looking at the moment. Gold has actually managed to hold its high price because of the current situation, because of all the skeptic thoughts in the market at the moment. So, you know, what we want to do is we're going to keep an eye out on this. It's going to break higher, so obviously, you know, we're looking for a long. If it doesn't, it starts to form a reversal pattern on a daily chart around this area. So you know, this is something that we can also think about taking short. Obviously, it all depends on what's going to happen in the economic situation. You know, if the markets are going to turn around, even if the indices are going to turn around. And, you know, we'll keep you posted of what's going on. So this is Adam from Dodjit.com. Have a happy weekend.